its issues. For anybody that is just now catching this stream, the previous one was not working very well. And we did a reboot and a reset, and let's try to get into this. Hopefully, once we start seeing feedback on the chat. The reason why I like doing some of these live streams is anybody that comes back to watch the live streams, even if you're skipping through it, you get kind of two focus points. You got the content within the video, and then you get the content that's off on the chat. So if you've missed something and you've skipped through the video, sometimes you have that second viewpoint from the chat, and you can see somebody that had said something that's maybe delayed compared to the video, and then you can go back and look at the video. That's part of the reason why I like doing the live streams. Hopefully, we're good with no lag now that we have. The sound sounds good. No clipping for people. Seems perfect now. Awesome. Very nice. I wanted to do this one live. I started to try to record this one as a one-off video, but I think this is more of a discussion point because there's facts when we talk Bitcoin network size, expansion, the things that are going on from legal tender and legislation, the things that are going on from just discovery of innovation when it comes to like layer 2 blockstream stuff with like Liquid and Lightning Network and Strike, to how does it compete with something like proof of stake, right? And like this is a discussion. This is something that's good for a live stream, and why a lot of core facts really set the foundation. We can have discussions on what we, as a group, as a consensus in general, believe and think. And I like having that discussion on both sides, kind of like a fireside chat with me and the audience. So let's get into this for folks that are the TLDRs and just want straight to the source of the content. If you want to follow along, I have a link below in the description when it comes to the essentially outline that I'm going to cover in today's video. And no, I'm not wearing makeup for anybody that's wanting to know. This is me, natural. It's just the lighting in here is we've got the lighting in. Good point. Besides, I do have like a little issue here where my light stream is kind of falling off my backboard here. So let's get into this. So Bitcoin as the standard, where does that kind of maximalist mindset come from? And when you really start to break down, I mean, I've been in this space for a very long time. I've been mining Bitcoin. I've been part of this ecosystem since late 2010. I made a channel in 2013 to start bringing you guys on board with regards to how things work, how to get into mining, that sort of stuff. Very pro proof of work channel. Just because I haven't seen proof of stake work in the ways that it needs to work, in my personal opinion, to even come close to challenging something like Bitcoin. Because there's a lot of, there's a trilemma, we'll get into it towards the end, that you're giving up stuff to get what you want out of something like proof of stake. So we're going to go into the clear and concise fundamentals and the breakdown why I believe Bitcoin is the standard. My personal opinion also that there is room for other innovation and why we cover a lot of other stuff. But for the where these facts are grounded in, it comes back down to proof of work. And the sheer force projection of Bitcoin's network compared to any other network out there is orders of magnitude larger. And in the recap video that we'll have here, I'll throw up some charts here, but when you start looking at the scale of something like Bitcoin, and I'll get into why this matters. For people who are like, oh, who cares? It's just a whole bunch of enterprise places like Marathon and some of these other groups now that are starting to take over it. That's a natural progression when you have scale, is you're going to have companies coming in, buying up scale, diversifying their risk when it comes to geolocating different areas. Ultimately, this is what happens when you have something at scale, something that's worldwide, 7-8 billion people potentially using something. You need to have a level of reliability. You need to have services marketed to it that range not just from digital cash. And to have that, you're going to have miners competing. The incentive is there for miners to compete. As Bitcoin rises in price, as it gains more price discovery through the fundamentals that it has with scarcity and known limit, no single point of failure, the big strengths of what makes Bitcoin. And as that hash rate grows, it increases the security. And we live in a world where we challenge everything, which we should, but it's because there is so much fraud throughout society. I mean, just this morning, I've received 2 calls of random calls from people trying to defraud people, right? Like you call us for insurance, or your IRS thing is not compliant or something, and it's somebody from some foreign country, trying to defraud us. We live in a world where the game theory challenges the status quo to try to get one over on somebody. And when you live with that as a concept of not just concept, but a reality where there's fake news, there's incentive to undermine somebody else, right? When you get a system that is built to compete and create a consensus around something, which proof of work was designed to do, you have it's like a superpower of information validity. And yes, it is a whole bunch of just game theory challenging questions, challenge an algorithmic challenge to try to find something to get the rights to take what's changed, the ledger as it were, over a period of time and post that. And then you have that security that it can't go and be changed. When people come back and say, Ethereum and some of these other networks, Ethereum had to change. Ethereum forked from the DAO fork. And it's, in hindsight, Vitalik was just on Lex Friedman's podcast and talked to if things were done a little differently as they understood more, would that have actually happened or not? Hindsight's 2020, my dude. But to have a network that has had the history that Bitcoin has, this is a key factor of it. You have the hash rate that is unparalleled to any other. You have a natural incentive that drives people to have a force projection on it, have the arms race, as it were, to drive more to it. You have an incentive to move to renewables because you're going to go to drive down to the cheapest penny. There is a lot of, as people start to understand how ESG and energy sustainability work, when you really start to peel that back, and for anybody that wants to follow that kind of work, Nick_Carter on Twitter is real good at this. This is kind of his focus, is looking at the unspent energy, the energy that's out there that's not able to be used and effectively is unused because of the renewable, because there's nowhere to store it. When you start looking at those incentive alignments and you look at the way Bitcoin mining works, there is a natural progression to that. Bitcoin mining is a tangible physical representation of effort. And that effort is reinforced by the scarcity and the supply-demand dynamics of the way Bitcoin has set that standard on. These are the fundamental core pieces of where a maximalist looks at it and says, nothing is as big as this network. Nothing is going to be as big as this network. The incentive structures are not in place. The largest competing networks, like Ethereum, are moving to a different governance model around, which is not, it's proof of stake. Proof of stake requires you to have ownership in it. You have a lot of open theories on how that would be better. And I say theories because they haven't been proved out. They haven't even switched yet. There are other competing networks that have moved to proof of stake, but they have no size yet. So until those run out, you're going to have Bitcoin as that standard. This is the facts. That is the facts of it. But that being said, it doesn't mean that there's not, in my opinion, a disincentive to branch out and innovate. And we'll get into that a little deeper when I go a little lower on this outline here. You have that recordability of effort expressed in that total hash rate. As that hash rate continues to go up, that's more confidence into the network. There's more security into the network. And you have a lot of force projection of participants in there. You're going to have this natural order that is actually playing out as we see it in real time right now, where we have 18% or so in North America. We have 3 to 7% down in South America. There's 60+% in China that is now slowly degrading as China starts to adjust some of its rulemaking. Those types of things that are happening are creating a natural order of separation and diversity there on the hash rate to keep it as decentralized as possible. There's also, if anybody did not catch, and I'll have the links below, the podcast that Anthony Papanano just did when it came to Marathon, the largest North American miner that was doing OPEC censoring, has since switched that off and looked at a Bitcoin as a Bitcoin. Nobody's paying more for that, paying more for, untainted, quote unquote, virgin coins. All the concept around censorship around Bitcoin, even the drive to try to censor it is pushed off, right, from a worldwide participation. And it's not to say people don't try that. I mean, there's so many perspectives that say, well, they're dead to me because they went to do this. There's going to be a lot of situations where entities in general that are participating in the crypto ecosystem in general are going to do things that the community do not like, or the community is going to make that known. But that's part of the whole wisdom. Part of it, it's not wisdom of the crowd, but it's more of, hey man, that's not what this movement's for. What you're doing, we don't agree with, and you're going to be effectively shunned out of the system, type of thing. And that works more than just Twitter, people firing off Twitter things, right? There is implications when it comes to a larger community set over time with Bitcoin, where you'll have this natural kind of moral obligation that occurs in the space, to where miners' first piece is to try to get the lowest cost, thereby they're going to go with the cheapest stuff. However, if that's at a very high noise rate, like let's say some place in the world comes off and says, we're going to offer sub-cent mining, and it's going to be coal-based. Come to us. We have tons of coal. We're going to do that. The initial thing is that those miners are going to want to move. But if that signal to noise is very high on them to say, hey, that's not good and you're going to be shunned out, there's other secondary effects that can occur from Bitmain, and anybody else supplying the hardware could start to deny them, right? So there's a natural kind of consensus that's been fallen in the ecosystem. And this isn't just me saying this. This is what's happened. This is what happened with Marathon, as an example, where Marathon, based in the U.S., was going to start to censor coins based on a loose regulation of non-terrorist finance type of token, like where these entities and countries out there that are flagged as, against, the U.S. interest or against, the world interest. And there was this move to try to censor or color the coins predicated on those circumstances. And they were trying to comply with that. But when push came to shove, nobody pays extra for those coins. There's no incentive to do that, right? Short of trying to comply with some regulation that's going to have a lot of pushback on it anyways, because it's going to disenfranchise a particular country, this being the U.S., from doing it, from being part of this ecosystem in a bigger way. So there's incentives all around this. This is where cryptocurrencies in general bring an interesting dynamic from a social consensus and the implications that go back into business, to where business can just stop doing business in countries like this. We see this a lot with what's going on with China right now, where the Chinese government's putting a lot of regulation on certain things, and they're just going to move. It doesn't stop it. And this is where you get a lot of the, folks saying, oh, it's China FUD or whatever else. It's like a natural movement that will occur from it. It's like, oh, I can't do that here. Cool, we'll move, right? Or we'll sell the miners to somebody else. The net effect of it is just a transference, because there is enough social consensus in the world behind it. Again, really hitting on the fact that that's not saying other cryptocurrencies can't do that. It's just Bitcoin's the largest of those, and there's a lot of belief in that. Again, there's also recordable expressed event history with the ledger of that states those facts, that shows the transactions, the values exchanged on there, the highest priced token that's out there by far, $1 trillion market cap coin. The ledger simplicity. There's a lot of functionality being put into a lot of these other cryptocurrencies, and that is going to innovate and allow utility and other forms of expression for not just money, but possibly information, in where we're going to have this world to where we can public verifiable information through consensus, right? We consensusly agree this event occurred. It was written into this block. We all point back to this block. This actually happens right now on Bitcoin, and people kind of miss it. When people write metadata in there and say, key headlines of events that we all agree occurred, right? Like if something in the world has occurred, there was an eclipse yesterday. Like there, people would write in there, on this day an eclipse happened, right? Like, and there's enough social consensus behind that to point to that and have other assertions of information that connect to that string and say that yes, we all agree that occurred. There's networks and updates from other networks right now implementing to try to create a manifestation of that to where there is a social consensus around that. While that's not necessarily money, it's the enablement of that tech stack when it comes to the simplicity of ledger, of events, and consensus around that. It's just money is the first thing. Money is the thing that motivates the world. It's how it pays for goods and services. If you come into this world and you have no way to exchange labor for a currency of some sort, and everything is a transfer of labor to something, right? That's what it comes down to. It doesn't matter if you're just standing there and you're providing information. That's a labor of some sort anywhere in the world. So that's all currency is what you're exchanging by being here on this planet and doing something into some value of something, extraction that you can then use to exchange for other stuff. That's effectively what sound principal money exchanges to. Circumstantially, we have lots of currencies that represent that, an encapsulation of that. That's, again, a strong standard for Bitcoin because we believe, we see, and we can publicly verify through our own node that these events occurred. This is the fundamental core on Bitcoin. If we switch away from the physical things that are going on with it, proof of work, scarcity, the limited supply, we look at it's also the baseline in discussions across cryptocurrency on this planet. Worldwide legislation, lawmaking, core medium of exchange, all the other currencies look up and are derivative against Bitcoin. To think of just the paradigm shift of any other currency falling into that spot. People talk about the ETH flipping and all that kind of stuff. There is no motivation at all from any group that I've ever seen, including Ethereum people, that it would ever flip to where people are just doing their standard against Ethereum, right? Like your exchange rate against Ethereum versus like the US dollar versus Bitcoin. It is the principal medium of exchange. Everything will be based on that. It's physically limited to 21 million coins. It is the standard. And this is becoming into the fabric of that. And some people could argue that Dogecoin might be on the standard too, but if there's enough folks behind it. I don't think that, obviously, but it is funny. I've seen that's the only other discussion that I've seen, and that's been brought up by Elon saying that would be the standard. Core principles, money at the heart, built on distribution, schedule, and scarcity, of course. The no single point of failure, the distribution is a strong, key piece of it. And, the principles have been around for the 12-year journey of it. It's has statistical and a cadence to it on each epoch, each halving that has replicated in orders of magnitude, right? So, that first epoch, we've went to almost, $3. The second one, we went to $1,200. The third one, we went to $3,000. And now this fourth one, we're in with an order of magnitude showing, the upper bound of that around $400,000. And is that going to happen by 2024? Nobody knows, but consistently that run on supply, the growth of the hash rate, all the core principles of cryptocurrency in general becoming part of the fabric of all society, not just, any one society, promotes that concept of, this run on the value, the run on the scarcity of it then drives the value up. It also drives many financial vehicles when it comes to development within fintech. It always has, from exchanges to currencies. The exchanges all hold Bitcoin. Every one of them. If you are an exchange, you have Bitcoin in it. It's your top asset. It is the one that exchanges in some Satoshi derivative to another currency. Companies hold Bitcoin on their from the institutional side. They're doing it in Bitcoin because they look at that as the long-term thing. Will they hold Ethereum? Will they be part of the ecosystem in some way? For sure. However, the core basis is done in Bitcoin. These are facts, guys. These are not like, this isn't up for debate. It is what it is. Like, it's as fact could happen. That these are, don't confuse fact with position, but these are facts. Investments, from a concept from CFTC and all this other stuff, also long-term and short-term hodl. People that do stacking sats do this from this premise. If you're just an individual buying and selling, you're doing it with one of your key assets being in Bitcoin. However, some people do just go YOLO full into other cryptos because you can get a possible lift on people. Buy, sell, and trading other cryptocurrencies. But loans and lending, a lot of people is like, hey, there's no DeFi in Bitcoin. No, there's obviously development, but there is CeFi finance in Bitcoin right now. I mean, look at BlockFi when it comes to centralized, where you exchange your coin and you borrow against it. There is centralized loans and lending against Bitcoin. There's incentive programs that have been built around it when it comes to like Lolly and Fold, where you have plugins on your browser and you can earn sats in that way. A lot of financial instrument infrastructure being developed around that. Future prediction models now arguably have enough data when it comes to repeating cycles. There's enough technical analysis data at least to start to get into these cyclical cycles. And what comes from that is looking at inflows and outflows from exchanges. There's enough data now out there to where at least the start of this is getting better to understand a long-term hodl from a short-term hodl, from known enterprise mining facilities when they're selling their coins, these addresses. The public nature of these transactions being visible allows for information mining to understand patterns, pattern recognition, lots of architecture around machine learning around this to understand inflows and outflows. And from that, building predictive and behavioral engines around it. This is happening right now. This is where you get a lot of the technical analysis from some of the more like paid sources, to where they're tapped into some kind of machine learning to see these inflows and outflows. And then what they're doing is I'll give some basic context. For 3 years of my life, I worked for Anheuser-Busch, I worked for 11 years of my life at Anheuser-Busch, but for 3 of the years of that, I was a margin analyst and a pricer for Anheuser-Busch. So if you're in the Northeast, I probably affected your beer prices in 2006 through 2008 through 2010. I was your pricer in the Northeast. When you have enough information on behavior, you can start to predict certain things within some level of accuracy. It's very statistical. There are outliers, but it's a different form of finance when it comes to predictive analysis. This kind of content now, with 12 years of history, with I would say the last 6 years being much more predominant as more things have came in, there is a lot more science behind the bigger movement. So while there is some drawdown, a lot more things are mechanical. Now, does this hurt or help this whole concept of decentralization, all this stuff? This is the natural thing that occurs in just human behavior, where you're going to go through information mining of some sort to try to make a different prediction and stuff. Bottom line, no matter how much science is in this, those numbers go up because of the scarcity. The very basic premise of that is, if there's without any outside influence that negatively down pressures that, those numbers are always going to go up because of the scarcity. It's a supply demand dynamic. It is what it is. It's statistical analysis. Those numbers go up. What drives those numbers down is some existential secondary effect that happens. If some legislation or law makes it super friction high, very high friction on a very high liquidity market. If you have legislation come out to where every cryptocurrency, Bitcoin, whatever, in the US has to be KYC, everything. Let's just say $1. That would be a huge amount of friction. That would drive a lot of price down because some people are going to be like, I'm out. That's just too much friction. Don't have the time. Sorry, it's way too much overhead. It's a lot like in business, Sarbanes-Oxley, which was really trying to capture behaviors in reporting at businesses. It was a huge amount of overhead put onto a business, and a lot of businesses restructured. Some of them left the country because of the reporting requirements were so heavy. Now, as things have become a lot more when you had like DocuSign and all this other innovation around the ability to report, where you have business to business, security key chaining on business processes, business process mapping, and all that kind of tech that helps information flow faster, it starts to reduce overhead. You can start getting into more algorithmic reporting, where it's just not killing people. In 2005, where you had a lot of printing and you had people going through and filing everything. This is the same kind of innovation that I'm talking about when you talk cryptocurrencies and algorithmic flows and understanding things. You're going to have that's already happening right now. Annualized growth, innovation, legislation, world adopting it. We're seeing that with like El Salvador making it as legal tender. It's going to mix things up. There's a lot of laws that are going to be looked at. If you have other countries now starting to make this legal tender, there is very complicated things that occur when it comes to a financial market now that you have countries treating it as legal tender. There's going to be a lot of people breaking this down. There was a report that came out today from JP Morgan talking to this of like, if other countries follow El Salvador, it's going to create a very interesting dynamic, especially with like international investors and moving of money and taxations but this is all things that are going to be natural progression for the space and for Bitcoin. Again, this is in Bitcoin, another strong case for Bitcoin as standard. When we move into speaking to the innovation, layer 2 solutions are bottom line are going to provide a semi-centralized federated trade-off to allow you to bar tab style transact your Bitcoin in a much faster way. Again, when I say a trade-off, it is a trade. Anytime you go to a layer 2, you're trading off something, right? It is not a zero-sum game. And it's just like at a bar, if you were handing a credit card to somebody, you are starting a bar tab. You're saying, you know what? I don't want you to keep swiping. It's not good for you. You're going to be getting charged all this stuff. It would be better to do this one time. We're going to sub-tally all the beers in the room. And then you're going to make one post transaction at the end of the night. That's a bar style type of transaction. When you look at layer 2 and you look at Lightning and people opening Lightning channels, they are adding liquidity to it, and you have this sub-layer network that's going to reconcile over time down to layer 1, right? Same thing with Matic or Polygon when it comes to Ethereum. You have a trade-off to move to a semi-centralized. There is control on that. There's a different level of control. It's not, you are immediately divorcing the inherited security of layer 1 when it comes to control of your coins. You are transferring that stuff to a Lightning channel. There is where the regulation is going to come at is going to be at that level, right? It's going to. I firmly believe, now this is me speculating, that the core regulation is going to be transitioned to those high frequency environments. And it's going to be transferred to those high frequency environments because you're effectively relinquishing some control that you have when you're in a layer 2. However, that control, telemetry, all that stuff opens up a lot more algorithmic ways to handle the ask or the requirement, to where your co-signing event that you're occurring on that particular secondary layer could be a sub wallet that you use to that sub layer and that's your KYC address, right? So there's a lot of innovation that's going to go around that, but a lot of the activity is going to happen in those layer twos because that's where the volume is going to be at. That's where the money and the interoperability between businesses and countries and legal tenders, that's going to happen on a layer two because this just the sheer volume, right? That's going to be there. If an entire country requires you to accept a particular currency, that's going to be done on layer two, and that's where all the legislation is going to be at. It's going to go there, and why I have absolute confidence on that is because that is where rapid business requirements are going to be coming from. That's where the digital cash narrative is going to sit, with the fundamentals of sound principle of emission schedule, all that being on still layer one, right? That's where the coins come from. The facilitation of that digital cash narrative, development and integration solutions such as phone wallets, rapid peer-to-peer, rapid peer-to-business is going to come from those layer two wallets. It's going to allow that cheap transaction side. Again, with that trade-off. Now, some people are going to come back and like, dude, aren't we just reinventing banks? Aren't we just reinventing this overhead and this enforcement of countries and regulations and rules? We live in a world of regulations and rules. We do, every one of us on listening to this thing right now, every one of us, I don't care where you're at. You could be in a war-torn, currently ran by a no central government world, and you're going to still have some level of governed laws to adhere to. There's no place on this planet where it's just like free roam and you're defending your property by, some existential libertarian kind of concept. Every place has rules and regulations of some sort. Those rules and regulations extend into various components of our life, and then as a consensus, depending on what place you live in, you may or may not have some kind of voting rights to say, hey, yeah, no, dude, that's not going to happen. That sucks, right? And then if enough people say, yeah, that sucks, that doesn't happen. At least in the U.S., right? And now sometimes a lot of people say it sucks, but it's just not enough, right, to stop something. But bottom line, there's going to be rules and regulations in some of these things. Where that sets and where that manifests is going to be where the leanest friction, I believe, is going to sit, which is going to be as part of that development of those layer twos. It's where it makes sense. It's where there's the federated sharing of control, multi-sig addresses, where the entity is going to have that assertion to allow some level of rule making there from a compliance standpoint, from a reporting standpoint, transactions over $10,000, that sort of thing. If you are KYC'd, they're reporting it, that sort of thing. To interact at that is you're still going to have to where you can, the fact that you can come out of that and go back to your core wallet or start with your core wallet being on layer one and have that financial freedom, privacy, and all that, and then you choose how much you interact with that space is really kind of I think the medium, where the version of that right now, if we think about what I just said there, the version of that right now is that you've earned cash over a long period of time in whatever country that you're at. That's funny. The LED adhesive replacement fund for that $5 super chat. Thanks, dude. You have a non-digital version of this right now. If you hold some version of cash, if you're in whatever country and you take that and you put it on your pillowcase, that was your version of being financially free or whatever. Like, you've stored it, nobody knows you have it over a time period, and you can choose when you want to spend it, right? Nobody's taking it unless they kick down your door, right? Same version of that is in crypto is layer one. You're publicly obfuscated in some way because you have it in an address. You make the choice, your keys, your coins of when you want to use it. Nothing changes in that perspective. No, unless some government's going to get more than 51%, they're not changing that rule. Surprise, not happening. They can make it very painful for you to use that money, but nobody's taking your money, right? Same kind of basic concept. And this money appreciates, doesn't depreciate over time, right? So that's your core basis. If you want to interact with services, then and you gain some value and some utility that is being offered to you on some layer two, then you may have to comply with something. It's the same reason right now, like we go to Coinbase or we go to Uphold or any of these to try to get some of our capital back from power expenses. That's a KYC event. We pay taxes on that, right? We have to adhere to the rules of the land, right? I don't think anybody's necessarily challenging that. Now, you have definitely groups and secular groups that are going to challenge some of those rules. Some of them outright challenge all of them. But the majority of people just want to live, have effort exchange for some ability to enjoy their lives, right? We're exchanging our labor for cash, our cash to support our families and do things that we want. In as free as possible society as possible. And then go and challenge when it's not free enough or you feel like you're being oppressed, right? And that's where we get, people that will go out and challenge and protest and that sort of thing, right? So these layer two solutions are where that's going to sit, right? That's that regulation, that integration is going to set. Development, let's switch to culture. This has been going for about 30 minutes. Let's switch to culture when it comes to this. And I have a whole thing written up on this. The maximalist, the dogmatic culture when it comes to, Bitcoin. People are like talking about the maximalists. The maximalists take everything I just said, largest network, censorship resistant, the community showing even an entity that was going to censor being Marathon, that's bad news, and Marathon switching back to not having OSEP blocks. It's kind of self-healing, self-reflecting, self-healing with all the hash rate that's coming out of China. Part of that's forced, but just that's largest network, standard in every exchange, standard in all the finance, standard in all the institutional investment. Talked about most, all those different ideas, right? How does that not allow for other alternative, competing, or complementary solutions? This is where I'm going to kind of focus the last part of this on. Let's break it down. First, alternative and competing. And what I mean by alternative competing solutions, these are solutions that come out. These are developers, maybe marketers that come out and say, I'm going to build a better Bitcoin. The number one thing, the first thing that you read, if somebody's going to tell you that they're going to try to build a better Bitcoin, is look at how they write up the argument of why they want to make it better. And if their first thing comes down to transaction speed, just shift delete it, because it has nothing to do with that. They need to go with if somebody's trying to build a better version of Bitcoin, then you're going to have a uniform consensus around either proof of work or some example with history of showing why some other solution such as proof of stake is better. History, meaning it's happened. History, meaning there's all of the detail I was talking about earlier when it comes to telemetry and facts that occurred on the network to show, yes, this has outperformed in all of these various ways, not the future that it will. And that's not to disenchant anybody from making some kind of alternative. The point is that you make the alternative and you try to garner some history on it. And then the network makes the choice, right? The network size will grow. The value will grow. And then you can start making those claims, right? But that's where a maximalist kind of view from a competing thing. And it's not to say people are infinitely driven to try to improve and change. It's just a maximalist view will look at it and say, well, that innovation, that drive should be focused on Bitcoin. I look at it a little more different. The problem with I'll now talk kind of to some of the problems with that. Let's keep going for a second here. Coins that use adverse marketing tactics to try to separate you from Bitcoin specifically, that's really an edge that really tick a lot of maximalists off, because they're just trying to take your money. You should be putting it into Bitcoin. Coins that create noise to battle for the fiat. So it's not that they're saying sell your Bitcoin to get our coin. They're saying, hey, if you have cash, you should come into our coin versus another coin, right? So again, where it's competing against Bitcoin directly. Then there's a whole list of complementary solutions, which I would say is probably those top, the top 15, 20 coins that are out there from a market cap standpoint, where they're not necessarily competing with Bitcoin from an innovation, trying to take its brain pan. Like they're not proof of work coins. They're trying their own consensus algorithm, that sort of thing. I'm talking XRP, Cardano, Polkadot, Ethereum, by and large, where they're trying to innovate their platforms. They're trying to build a smart contract language on it. While some of the investors and some of the Twitter personalities come out there and say it's ultrasound money and all this other stuff, it competes with Bitcoin and money. That's not fundamentally. Fundamentally, that argument is completely broken. It's not a scarce asset. There was a pre-mine on most of them, meaning that there's higher orders of ownership that were dictated initially. So by design, they're fundamentally flawed from that. From trying to be sound money is where it really comes down to. Because effectively what you're saying is I'll use Ethereum's case in this, from being an ultrasound money. It's not to discount what Ethereum's doing, and that it's not going to have innovation, and it's not going to have growth, and it's not going to move the needle on the space and create all kinds of utility. Nobody's arguing against that, and I'll get into that. I'm saying from an ultrasound money standpoint, it's like saying, hey, Dr. Gavin Wood, Vitalik Buterin, and a few other folks were literally minted 300,000+ coins. Airdropped, created, pre-mined. So from an ultrasound money standpoint, it's flawed. You are effectively saying that I'm okay with, from an ultrasound money principle, I am okay with the central bank of Vitalik owning a extremely, at release, it was an extremely large amount of supply. But when you look at the totality of everything sold to all the early investors and people that wanted to take a belief that this was a thing and got in early, that you're believing in their investment as like the central bank, right? And then there's an X amount of coins that are fairly distributed through the principles of what Bitcoin did, where it was fair market launch. With regards to the remaining coins that came out, were all competed. We all made miners. Anybody that's mined Ethereum, which this channel's made 300 videos on how to mine Ethereum, to participate in that. But from an ultrasound money concept only, this is where, I'm like, come on, like, dude, there's no comparison when it comes to like Bitcoin on that. And I would almost make that argument with stuff like Ravencoin too, like other altcoins. And that's why you always see me talk about Ravencoin. It's fair market launch, use the Bitcoin code, has a limited supply. There's other coins like that have limited supplies. Feathercoin, Litecoin, same thing, same basic principles. Forked a currency, added some level of innovation on it. In Litecoin's case, or literally forked Bitcoin and just changed script. Wasn't providing extra development and innovation in that space. Other coins, forking it and making it, making changes to it. Making changes to Bitcoin's core code, adding Ravencoin, adding assets, adding restricted assets, trying to comply with regulatory SEC laws, right? Those kind of things, bringing some level of innovation at layer one, at not the layer two section, right? To where now you can create all these other federated, co-signed risk elements. You're doing it at layer one. You're doing it at the decentralized layer, with something like Ravencoin. These other coins being complementary with regard to tackling other innovations, with like Taproot development for Bitcoin, right? Some of that development, some of those why it's been sound around Bitcoin, some of those folks and project teams works on other tokens, other coins. So that innovation that's brought to the space, I believe, has been, and this is the non-maximalist view, right, is a net positive for the innovation in the space. Monero's done in a massive amount of, it's a FOSS project. So it's a free and open source project where people put forth, hey, I can make this change in privacy. This I think will innovate. And then people punch holes through it and try to innovate it and move things forward when it comes to privacy, right? Ring signatures, that sort of thing. Other projects that have brought complete innovation and have had innovations that have had to come in and fix things that were not as necessitated as Bitcoin. Bitcoin has all the mining hash power when it comes to SHA-256, a huge portion of it, that is. And it doesn't have a 51% protection because literally it's orders of magnitude higher than anything else out there. Other coins, however, that compete for the same graphics cards have learned, unfortunately, the hard way that they have to create some other kind of innovation to make it not 51% attacked. So they're taking a step in decentralization of creating checkpoints, creating things that exponentials like Ethereum Classic had to do, where you have an additional math problem that has to occur because they can't trust just 51% of the network being honest, right? There's other innovations that have came out of that. And, and some of that innovation, if Bitcoin ever had this, I would call an unknown event where you have some kind of breakthrough in algorithm design, and you have an ability to create a much cheaper unit because you can crack SHA-256 faster by orders of magnitude faster than anybody else. A lot of people have said this with quantum, like the quantum risk. But if you have like this one instance of somebody that can take that hash power, what is the innovation that's been out there that could quickly be forked in to protect that? Now, this is something that Bitcoin wouldn't necessarily have to worry about now, right now. But like, again, other innovations that are out there, other teams that are working on stuff. And it comes back down to that central argument of why do people break away from Bitcoin as a core and then go to try to build something else? And it comes down to, ultimately down to control of something. Why did Dr. Gavin Wood split from Ethereum and go make Polkadot, right? People have different ideas. People want influence of those ideas to get implemented. So they take some code base and they fork it and they go and implement that idea that they have. And that idea either gets implemented or not implemented, or it gains some kind of notoriety, or it gains some kind of influence to allow other people to start to add to it. That's effectively what's happened with Ethereum's ecosystem, regardless of its pre-mine, regardless of its decision-making process that I always haven't agreed with, obviously, and many others when it comes to reducing unscheduled reduction of messing with the monetary system, those sorts of things, those have direct impacts on, public confidence and that sort of thing, forking from the DAO, that kind of thing. When you have, but you've innovated also very heavily in certain areas, created the concepts of DeFi, which now ironically are going over to Bitcoin, right? Where people are trying to build layer 2 solutions of DeFi on Bitcoin. A lot of that brain pan and that brain trust is coming from those innovations. So when maximalists and folks come in and say it's only Bitcoin, I don't want to hear anything else, that's fine. That's a position. But I don't personally dismiss the efforts by a lot of others. I don't necessarily agree with their monetary discussions. And there's always going to be investors that are going to say whatever to try to pump their coin. But I look at it from an innovation standpoint. What are you bringing net positive to the space in general that changes fundamentally the way all of us humans interact with each other in the most trustless, I can verify myself, way possible? That net positive is good for everybody on this planet. It's a grand equalizer when it comes to, it transcends borders. That's why folks with proof of work, why I've always been pro proof of work. Anybody can watch one of my videos on proof of work on something like Raven or Ethereum or Bitcoin, and they can tune a machine, get a piece of hardware, and participate. And for their participation, they get a stake. They get a portion of their effort represented into that particular token. That particular token happens to be worth money on an exchange. So you're exchanging your effort and your time into value that is extracted in just a different way, in a lot more organic way. And that's why I'm always been pro proof of work. I haven't seen a better solution. Why I will explore proof of stake, and I will go through and point out things that I see with proof of stake. It's still, I still will take a pragmatic approach at trying to understand it and point some of its issues out for people to understand it, and then some of its positives that are out there that we end up seeing from it if positives start to emerge in a better way. But I wanted to make sure that we had a quick one on why Bitcoin's out there, why it's the standard, give some good proof points out there. I mean, we'll have a recap of this. This has been about a 50-minute thing. I'm going to go through about 10 minutes or so of question and answer with you guys. So if you guys have questions, I haven't been able to watch the chat here. I will go back and read some of the chat and answer some of your questions in the comments too, for folks that see that. But let's take a little bit of time and see some questions. If you guys have any questions on stuff, make some points. I mean, you guys heard me ramble for 50 minutes on these points, and I'd like to see some of your guys' comments. What do you think in this space? There's one question from Marshall Ong. What are your thoughts on devs promising that their token will be ASIC resistant and then screwing miners later on, as seen in Zcash and ETH? Well, I think I mean, obviously I have my own opinions on this. If somebody's written a white paper and they have a basic premise of why their particular effort is going to uphold a statement saying that they're going to be ASIC resistant, I take ASIC resistant meaning that if ASICs start to show up, you are going to propose solutions to continue that ASIC resistance. That did not happen with Ethereum. Ethereum ultimately has leaned into ASICs. And it is, it's just it's a break of trust. I mean, people have their own opinions of it. I think that it's kind of this weird thing with Ethereum, because Ethereum was we were supposed to stop mining Ethereum in 2017. When I started mining Ethereum in 2015, I was like, hey, there's a 2-year run, and then they're going to have this proof of stake thing that they're saying. We're in 2021 and we're still mining Ethereum. We're competing with ASICs, and GPUs are still keeping up with it right now because of the price point. But it's a kind of a catch-22. The yields would be a lot higher if ASICs weren't on the network, but they kind of succumbed to their own size. It's like steering a big ship, and the community doesn't like proof of work. And so any discussion on proof of work things or risk with it have been largely dismissed. And it is what it is. We just kind of keep rolling with the punches. That's why there's other tokens out there that do hold up to what they said they were going to do. And it's just do you trust a community or not? Let's see here. What's your take on Ergo? I don't have one right now on Ergo. Let's see here. Will proof of work always be the most prevalent? I think so. I think until proof of stake, I think there's a huge game dilemma there, gamer's dilemma, game theory. Proof of work has proven to have the best representation of taking something and energy and turning it into a measurable security value to reinforce information, the ledger, the information that has happened and is accounted for. So this information happens to be money in the exchange of money on a ledger, but it has been the strongest reinforcement of that. And I don't see anything changing that right now. I think proof of stake has a whole bunch of other fatal flaws with it. There's nothing at stake issues. There's a huge centralization of issue when it comes to the stake. It comes with the implementation methodologies that are used. Like when you're in a node, you can get slashed. That means that you are relinquishing some level of control to the network now on your coins that are staked. I don't like that. I don't like the concept of that. And I understand that was one of the things that you have to do with regards to addressing behavior on a network. But with mining, you're exchanging hash power. For that hash power, you're taking chances at trying to solve something. You're pooling that hash power with a whole bunch of other people, and you're sharing in the rewards for your effort. It's very linear. It's fairly eloquent. It's simple from that basic concept, and you have that immediate gratification of getting something for your effort. With proof of stake, you have to show up with stake, and now you are in a relationship with the network in a different way that's reinforcement mechanism. If you are perceived as a threat, they can take away from you. I don't like relinquishing control in that concept. I think part of that is at a layer one fundamental level, it needs to be permissionless. You can't touch my stuff if it's in a coin, or if it's my address. And I think that's a fundamental flaw with it. Now that's not going to stop it from becoming a $20 trillion market. Like don't separate the fact that a majority of people are not going to care. Honestly, it's just what it is. They're gonna wield into what gives them the best utility. And if Ethereum becomes the platform where much utility is built on, people are going to dismiss the fact, and that's where we get into like the banking situation right now in large governments. Right, Ethereum is just going to become a extremely large government organization, because they can manifest their whims on the network. They're doing it right now. They've had EIP 1559. Why it says it was a consensus thing. There was a huge initial pushback by the consensus of the network that upholds the mining, and we've seen how that community reacted. And effectively, it would have just forked the coin, and that doesn't really help anybody anything, right? So Ethereum's always had they plan hard forks. The network goes with they have the ability to they made the decision to do the DAO fork. I mean, the miners either were told to go follow this or go somewhere else, and some of them split to make ETC. So when you have a governance structure, a foundation, Ethereum is not decentralized as people think it is, right? It isn't. It has never been. It's the same thing with a lot of these other tokens, Polkadot and all those other things. When they want to force a hard fork, you're going to get that hard fork. Bitcoin has not had any hard forks. It only has soft forks. So by design, it is the manifestation of decentralization. And that's why it is one of the strongest networks. And that's why the maximalists have their views, Miss Hodel and all those other folks. I understand their view. I think that it's short-sighted to understand, though, that humans are amazingly smart and sometimes want to innovate past the rule sets of what just Bitcoin is. And they make other things. And I like the fact that people will innovate in other ways that could be beneficial to Bitcoin, but are going to create other ecosystems that provide other value streams that are just not about cash or value proposition, that there's utility. And that I had in this breakdown, there's a manifestation of value, that's stored value, that's usability of value. The actual fundamental of you being here, waking up every day and going to do something and exchanging that in for some currency of some sort, and then being able to spend that for the things you need. Bitcoin manifesting in that layer, right? But there's a lot more things than just buying and selling and holding and bringing value. There's utility. There's functionality of things that provide easier things for your life. Things that are going to be automated, give you information faster for decision making. Those sorts of things that are algorithmic, reading out history and data, those sorts of things. Are going to manifest in probably other blockchains. And maybe there might be Bitcoin derivatives of it, but those things are going to be innovated. And that mechanism that makes those things function in Ethereum, that make those function in Ravencoin and Ergo and some of these other chains that are trying to innovate the thread there to provide other value, are going to be the underlying token is the exchange and the automation to provide some value proposition under that effort. And for that value proposition, you can exchange value to get that resource or that utility out of it. It's a lot of it's like with NFTs right now. The NFTs are being manifested in Ethereum, right? And circumstantially, wrapped Ethereum is the mechanism that allows that value transfer. But that doesn't take away from an artist being able to spend effort and time on their works of art and somebody wanting it and wanting to buy it. They're doing it through wrapped Ethereum. This isn't a question, right? So is Bitcoin going to have a derivative of that? Probably. It should have that derivative, but is somebody going to spend effort and time on that? Well, it needs the tools to be able to do that. Otherwise, they're building that tech stack themselves, right? Ethereum is a platform for developers to build things on. Bitcoin is sound money, right? From a concept of proof of reserves and all that sort of thing. So, I think there's a mutually beneficial relationship with a lot of these different chains from that. Marshall Ong, I personally love your videos and insight into mining space. The information gives a real good education. Keep it up. Thanks for the good work. Thanks, buddy. Thank you, sir, for that donation there. I do appreciate it. I take all these donations. Anybody is wondering, like, hey, why is BBT's been around for a long time? Why the hell does he need donations or something? I take all these donations, and it goes into the channel. So I just hired an editor. I pay for all that out of pocket to try to get this content and videos to you guys. So all the donations and stuff go to supporting this content delivery, as it were, to you guys. Now, obviously, I mean, we have ads and all that kind of stuff, and then some sponsored content, but I mean, most of this is out of pocket. Yeah, you can see my like, that's my version of trying to make this place look cool, and the adhesive is falling. With your GPU mining entering, GPU mining enter being triple profit to start with. I don't understand the question. Would you advise somebody to start crypto mining now, given EIP 1559, Ethereum 2 round around the corner? I mean, it all comes down to a personal situation. It comes down to, you already own hardware. Do you already have? That's part of what the last few videos have been around the gaming PC build. Like, you already have a gaming PC, you can actually mine cryptocurrency and earn a little extra from that. There's brokerage services like a NiceHash that pay you in Bitcoin for your hash power. There are direct solutions with it. So if you're going to go invest a whole bunch of money to think that you're going to get an immediate return, that's a high risk. It was a higher risk now than it has been, 6 months ago. And before that, it was 6 months before that, it was a high risk. It all comes back down to your personal situation. Do the math. There's tons of calculators out there. We have tons of videos. Red Panda Mining, Son of Tech, Vosscoin, a lot of them have a lot of different value propositions that are presented to do and interact in this space. It really comes down to, if you get into mining and you do it at any kind of scale, it all comes down to the longevity of it. Nothing turns around in 3 months. Nothing turns around in 6 months. It's more of a longer term solution, a year plus effort on that. But it doesn't mean that you have to go full on. I mean, people do it with their gaming PCs all the time. Villain in this game. I just got a 3070 Ti from New York Shuffle yesterday. What do you think the best coin to mine with it is? I'm thinking RVN. RVN's actually really good with it. ETC's been doing pretty decent. Any of the Ethereum-based coins that do DAG are very relevant. It comes down to the longer-term play. There's a lot of good videos that explain that through. The last one I would say recommend about 2 weeks ago. I covered kind of the thesis on that. If you're mining with one GPU, and you can look into that, your yields will be a lot higher on Raven. I don't know if I got any Bitcoin. Is there any Bitcoin folks in there? Like just straight Bitcoin folks? I'd like to. Maybe I'll be talking to some Bitcoin folks next week. So, all right, guys, I'm going to wrap this one up. It's been right at an hour. Like, subscribe, share. Please hit the like button. If there's 400 people in here, if you hit the like button, that's what drives up the engagement on the algorithm side. If you guys don't follow me, you should. I'm going to be at the Miners Summit next week. That's in the Ozarks. This is Bitmain, ASIC Jungle, MicroStrategy is going to be there. And it's very Bitcoin focused. It's a discussion on, ESG, power, North American mining in general being there. Galaxy Digital is going to be there. I'm going to be set up. I'm going to be taking interviews there and talking to people. And it's going to be kind of interview style. I'll just be asking them questions, just like a podcast, and bringing some content to you guys. So make sure you go out there and you like, subscribe, and share that. And we'll be bringing some good content for you guys. Also have some builds. We're doing the big updates to the mining farm. If you guys follow me on Twitter, make sure you follow me on Twitter. I've been showing you guys some of the progress there, where we got the flow plates for the immersion. We're going to be immersing all of the RX cards that we have at the farm, and going through that with you guys as we learn it. We're learning a lot through it, learning about the fluid dynamic, thermodynamics on it, and I'm going to be taking you through some of the lessons learned with that. So you're also going to want to follow that if you're kind of wondering how like an immersion project will go through. So I will catch you guys out on the next one, and